the Valley IPO frenzy is here. Kicking it off is going to be Nykaa, seeking almost a $7 billion valuation when it makes its market debut. Joining us is the boss lady, Falguni Nayar, live right here on ET Now. She was one of the leading investment bankers in the country who then decided to give it all up and start Nykaa in 2012. Nykaa in Sanskrit means heroine. So let's find out how Nykaa is going to be the heroine on Dalal Street with Falguni Nayar. Falguni, thank you so much for joining us here. It's going to be a big IPO. The price band has been announced. It's going to be launched this coming Friday. My first question to you is, why are you so confident that this IPO is indeed going to be a blockbuster?
I think we've done a lot of work over the last few years to build a solid company with the right fundamentals and, as we call it, the right offering to the customers, which we see in terms of all the brand love that we get from our customers. And I think a company like that will probably be better understood by the markets, and hopefully we'll enjoy similar delight amongst our market participants.
Now, Nykaa is also different from the other tech companies that are going to the Dalal Street in the sense that it is already profitable. So in that sense, Falguni, I want to ask you, the last comparable IPO we can possibly have is of Zomato. Now, despite being profitable, why is Nykaa seeking a valuation pretty similar during the IPO time? Is it because maybe the markets are on sell-off mode, or you tell us what has been the logic?
No, I think I'd like to talk about 2-3 principles. First of all, as far as the internet companies are concerned, profitability is a balance between customer acquisition and how you're seeing in terms of your customers you acquired in the past, what kind of returning behavior you're seeing amongst the customers. So as we've shared in our prospectus, Nykaa has a proportion of 30% new customers and 70% of the business coming from what we call as our returning customers who have bought from us during earlier periods, and they are coming back to buy again. And I think it is this fine balance between acquiring new customers and returning customer that dictates the near-term profitability. I think in the long run, what the market is crediting various businesses is, the fact that, the large as the markets are overall, whether beauty and personal care or even fashion, is a very big total addressable market in the country. And as a very small percentage of it is online right now, just about 8% for beauty and 12% for fashion. And what the market believes is that this penetration of e-commerce is going to go up. And that is why a lot of platforms which appeal to the consumer from buying online perspective are enjoying a good valuation. Within that, I think each of the markets, like whether be it food delivery or be it e-commerce or travel portals, I think each of them are very different market with different addressable market and also the kind of penetration that they can achieve. So I think in the long run, investors are going to look at the longer term prospects. So I think comparing like for like, someone being profitable, someone being larger in size at a particular moment is not really of consequence. What matters is in the long run, what kind of a journey many of these companies would experience.
With a price band of 1,085 to 1,125 rupees a share, Falguni, have you left enough value on the table for investors post the IPO?
Of course, I think personally for me, having been an investment banker, it was very important for us to make sure that we don't dictate the valuation and we truly are open-minded about how institutional investors, particularly who come in through the anchor book interests, and also beyond that, our bankers who represent how retail and high net worth individuals will consider this particular offering. So taking advice from all of them, we have allowed them to tell us what would the reasonable valuation be, and then made sure that we leave reasonable amount on the table so that no investor ever feels that they didn't get the right deal should there be volatility in the market. So I think from any company perspective, there's a lot of, if I get any advice from the corporate world, it will always be that, make sure that you leave enough value on the table for the new investors who are coming in.
Okay, so you're not worried at all about that. You've dealt with this entire talk of frothy IPO valuations, which has been doing the rounds. But Falguni, just the turn in momentum, maybe the peak bull cycle, there are some who believe is behind us. Some are saying, no, this is a super bull run. Does any of that concern you? I know timing the market is always very, very difficult and maybe impossible, but is that a cause of concern? Because your IPO is coming at a time when the markets are in consolidation and correction mode.
I think obviously we have seen that in the private market, there's been a lot of interest in many of the internet companies. But I think from a public market perspective, there are literally a couple of one or two IPOs that have gone ahead of us. And what remains is a large number of deals that are likely to come to the market. So for sake of the market, I do believe that the way investors see it as a multi-decade journey, and I hope it turns out to be like that, with a really good experience for all shareholders who invest in the internet economy. So I think at any point in time, because investors like this space and they are ready to discount a lot more forward earnings, it may look like is there a risk at the moment? But I think one has to take a much longer term, longer term perspective of how this sector and these companies will grow and what can they deliver in terms of offering to the consumer and how should that be valued. Like, for example, even if you look at Nykaa, the pace at which we have grown, we are a 9-year-old company, 8-year-old commercial journey. And today, from whether it's physical retail, whether it's e-commerce, the kind of offering one gives in terms of the number of 4,000 brands on the platform, the number of SKUs on the platform, and almost ease with which consumers can transact across categories, across brands, across so many SKUs. I think all of that is what is being valued by investors.
Falguni, I think what the pandemic perhaps also taught us is the makeup, cosmetic, grooming business recession proof. Going through the fine print, I see that not only have you bounced back, but you perhaps you've beaten pre-COVID levels as well.
Yeah, I think what was interesting is that in the actually RHP, we've shared the quarter one financial year 22 numbers, which is basically April to June quarter, when, if you remember, we did have the phase two of COVID, and there was a large human price to pay in certain cities. However, there were no nationwide lockdowns, and because of that, what we found was that the business continued very strongly, and in fact, at an overall consolidated GMV level, we have reported a $199 million GMV for the first quarter of this year. And also what we found was that both fashion and beauty businesses grew very strongly. Like if you look at year on year, because the previous year, April to June was a washout year. So in fact, in fashion, we grew 9x and in beauty, we grew 178%. But even if you were to ignore that comparison, because it was it was weighted towards, because last year was a lockdown year. But even on a quarter-on-quarter basis, we've seen very strong growth of 12% quarter-on-quarter growth in beauty and as much as 43% in fashion. So we did have a blockbuster quarter. However, again, physical retail was a little bit subdued. We think it is doing better. Going ahead, it will do better as things open up. And just looking forward to consumers coming and embracing beauty in a manner similar to what they were in a non-COVID period, especially makeup.
If I were to look at the strong growth that you've seen in the quarter that you talked about and you've declared in the red herring perspective, the quarter that has just gone by, Q1, what would have been the main growth levers?
So I think Nykaa has started doing more customer acquisition. I think over the last year, full year numbers are reflective of first half where we were quite impacted by COVID and, essential, non-essential business. There were restrictions in many pin codes. So we don't remember all of those, but it was in first half of last financial year was impacted by COVID, because of which the customer acquisitions were limited. And while we picked up customer acquisition in second half, we started feeling bolder towards earlier this year because supply chains were also better. So I think it was a quarter driven by very strong customer acquisition momentum. And I think we do believe that we'll continue to do that going forward. And of course, along with that, we found that consumers were also ready to come back and consume certain categories that they were not consuming during the lockdown. So I think makeup was one such category where we saw a big difference between COVID and non-COVID consumption. Though other categories, which are more personal care like skin and hair, they've been growing throughout. And businesses like fashion, which were mostly physical businesses, people buy more fashion in the store, but I think more and more consumers are more comfortable buying even fashion online. So a lot of impact of pandemic. COVID impacted 2 years, 1.5 years, but many of those consumer behavior changes are here to stay, I believe.
Oh, fashion is certainly making a comeback. I think every fashion player is talking about it, and even the likes of Myntra, etc., have been on ET now. But Falguni, one thing about growth I wanted to ask you, is the growth that you're seeing broad-based, or is it primarily coming back in the bigger towns?
No, in fact, the other way around. What we've seen is that the tier 2 and 3 are growing very rapidly, much faster than the tier 1 cities. And in fact, now even for Nykaa, almost 60% of our orders and consumption comes from tier 2 and 3 cities. So tier 1 cities, metro cities are just about 40% of our sales, and the tier 2 and 3 are 60% and also growing faster, which means that future proportion will be more in favor of tier 2 and 3.
So if you focus more on that, tier 2, tier 3, what about premiumization? Are you seeing a difference in the consumer behavior with the size of the shopping cart and all of that?
Yes, I think throughout the lockdown, we've seen improvement in our AOVs, both in beauty and fashion. We can share some of those numbers with you, but we have seen a large increase in AOVs. So for example, if I tell you, for the 5 months of this year, which is period ending August 2022, our fashion AOV is at 3,197, up from 2,739 for the full year of last year. Similarly, on the beauty side also, we saw a big uptick in AOV to 1,963 levels in financial year 21, which was up from 1,448 in the previous year. So we've seen improvement in AOV both for beauty and fashion, and we think the consumers are getting more comfortable to buy online, and they're coming back more frequently. They're adding more items in the cart at times, and also there is a clear premiumization. Also, I think our percentage share of luxe business is going up, and we do see that there is a premiumization across beauty and fashion.
So Falguni, one reading through the red herring prospectus, etc., one can see that you're going to make a bet on the physical stores as well. What is the rationale behind that? Are these going to be all company-owned stores? Are you going to look at a franchise model as well?
Right now, they're all company-owned and operated stores. Of course, they're rentals where we operate it. We do believe that that's the right model at the moment, and we are going to be focused on trying to roll out the stores on our own. We may change that perspective should we were to have a larger ambition in terms of number of stores. Declared in the in the prospectus on near-term plan and focus on our store rollout, and that comes from our understanding of the consumer, that even when consumer buys online, they're at heart an omni-channel consumer, and they want to come into stores once in a while, to maybe find that right color of the foundation or right color of the lipstick, or sometimes to get some advice on their skin concerns. And I think from a beauty perspective, it's, in our opinion, it's clearly an omni-channel business, and that's what Nykaa is building.
Falguni, we've seen in the fine print how Nykaa has acquired Dot and Key. You have your own brand as well, where I would imagine is the more high margin business, right? Is this also going to be part of the strategy where you could see Nykaa buying out smaller D2C players and maybe rebrand them? I don't know if you'll rebrand them or not, but that's going to be the focus area too?
So, we always say that we are a multi-brand retailer first, and our platform and our ability to distribute is available to all our brand partners. And I just said we have more than 4,000 brands on our platform across beauty and fashion. So at the core, we are a retailer first. However, within that, we do have an ambition for being a house of brand. And at the moment, we have about 10 brands across beauty and fashion. So in beauty, as you're aware, we had built a couple of brands, Nykaa Cosmetics, Nykaa Naturals, as well as K-Beauty. We believe that there is great opportunity in skincare. So with Dot and Key, we are addressing the skincare market, which is growing very rapidly. Of course, some of it was addressed by Nykaa's own line, Nykaa Naturals, but there was more to do. Similarly, on the fashion side, we acquired a couple of brands like 20 Dresses and which is for Western wear, and Pippa Bella for jewelry. And we've also launched a couple of our own brands, Naked for lingerie and athleisure, as well as Gajra Gang, which is for ethnic wear. So I think we will always have a combination of our own brands as well as, what we call as some of the brands that we acquire. Or we have a practice of what we call as intrapreneurs. We bring great entrepreneurs into the company, and then the company supports them with all the, the working capital finance and distribution, and all of the headaches from the promoter perspective get taken off by a large organization that Nykaa has, and the creative entrepreneurs who have built those brands, the brand owners of brand, they're so passionate about the brand and what they're offering to the consumer. So their focus is on identifying the consumer needs and fulfilling those with great product. And I think this model really works because we take care of a lot of support functions for them, and they can put their creative energy on creating and building a brand.
What about the $1.5 billion men's grooming market, Falguni? You have entered it. You've become a leading player, a force to be reckoned with, a brand to be reckoned with when it comes to the women's segment. But when it comes to the men's segment, you're seeing the likes of Marico, HUL, they're also all entering it now.
Yeah, I think it's a good opportunity. It's a space that we are considering. Actually, we do have a portal called Nykaa Man, which caters to the men's requirement. We do believe we always carried many of those grooming products for the men on the main website, Nykaa.com. But we felt that because makeup and skincare was our big business, we felt that men wanted to shop in an environment that they felt more comfortable with. So with Nykaa Man, which is both a social media handle on Instagram as well as our app, which is called Nykaa Man, we are really building a men's-centric business. And there too, we have ambition in terms of launching some of the private labels, as we go forward, that will address that market.
Falguni, what we saw with the Zomato IPO was record Demat openings, customers becoming retail investors. We saw what happened with the likes of Zerodha and Grow, how they came out with statements saying the Gen Zs, millennials, how they wanted to participate in the Zomato IPO. How is Nykaa going to leverage all of that?
So I think that's very interesting. What you've noticed is what has happened is that today the brands that the millennials and Gen Z are familiar with are coming to the market. And also Gen Z and millennials are interested in investing in the market because there's been a lot of focus and attention on the markets, not just in India, but globally. And this is a global phenomenon where younger Gen Z and millennials are investing in the markets. So I think it's very interesting. It's always very interesting when the consumer profile and the investor profiles merge, because then there is a lot of conviction that this is the right brand and it's the right company.
So any kind of particular outreach that is being planned?
Not really, because you know how the IPOs are, with a lot of constraints on how and where you can reach the customers and the investors. And in today's COVID affected times, one is able to do much less than one would have liked to do. So much, you are very aware, you must be aware that how much Nykaa does in terms of consumer reach and interaction with our customers in a physical environment. Pre-COVID, we used to do beauty bars, we used to do, a lot of festivals where consumers would come and experience our offerings in a physical world. I think all of that has been constrained due to COVID times, and we are eagerly awaiting return of those. However, as far as the IPO is concerned, we've had to go with more traditional mediums which are pretty much digital nowadays. I mean, this interview should have been in your studio instead of being done this way.
Of course, Falguni. Now, what we've also seen, is whether inflation is transitory or structural. The fact is we're also seeing global supply disruptions. Cosmetics has also been very badly impacted. Even shower gels in the US, for example, have been impacted. What has all of that meant for Nykaa, particularly in the festive season?
I think we saw it last year particularly bad because, if you remember, post the lockdown, October, last year's Diwali, post October, we saw very strong momentum in our business, even in our stores as well as e-commerce. And then suddenly all the brands were out of stock and the supply chain was majorly impacted. I think this year people have tried to do a better job. But yes, there is a lot of lost business due to supply chain constraints. I think for this coming season, we have tried to be a little more aggressive on the inventory bets that we've taken. so that we don't deprive the market. But it is a constrained period from a supply chain perspective. And the demand remains quite strong, is what I feel. I think today consumer is quite eager to get back to normal times, and at least demand for smaller consumption items is definitely back, is what I would feel, and I would say that.
So, as a listed player, when will you be able to do cashbacks, discounting, etc.? Do you think going forward, particularly at a time when there is a supply constraint, if price hikes are also announced, will you be able to do what you could do as an unlisted player?
No, it's not about listed or unlisted. I think Nykaa's philosophy has been to never do discounting from our own pockets. We only do discounting which is brand led and brand funded. And I think this is a discipline that we've believed in. And a lot of digital businesses think that discounting is a way to acquire the customer. And I think what Nykaas always believed is that it's better to offer the customer right. I used to say when we started building the business, I used to say that it's better that I offer consumer the right color of the lipstick at the right price rather than wrong color of the lipstick at discounted price. So I think we've never tried to build the business based on extra discounts or clearance sale or any of those. And I think we take pride in the fact that whether it's our beauty business, whether it's our fashion business, we do a lot of business which is new launches, fresh stock, like new season stock. And I think we want to truly build a platform that gives consumers that satisfaction and excitement of consuming the on trend, the best of what the world has to offer kind of products. So I think we have positioned Nykaa platform very differently, and most of our consumers recognize that Nykaa is working very hard to bring the best of the global brands. So if you're aware, we brought Huda and Charlotte Tilbury, which are very expensive, but really on trend, most popular global brands into the country. So I think that has been our approach, that let's bring high quality international brands to the Indian consumers. We've also focused a lot on the Lux business, which you're aware of, and try to build a business for that, because we do believe that consumers are, if you give access to the consumers have appetite for more premium products. I think premiumization of personal consumption in India was something as a trend that we recognize, and we've always pursued that.
Falguni, my last question, because I know you have a really busy schedule ahead of you. When it comes to these tech internet companies like yours, consumer facing too, one always says, forget today's financials, look forward. These are companies in hyper growth phase. You have said in the past, should you look at growth and profitability exclusively or not? But tell us, where will Nykaa be in a couple of years from now? Why should someone apply for the Nykaa IPO?
Where will Nykaa be in terms of financial size is something exactly what I can't say on this interview and today. So it's unfortunate that I won't be able to do any such long-term prediction. We will have to leave it to the analysts on the street who have lots of predictions on those. As far as the company is concerned, what matters to me is to build long-term sustainable company. And I think what matters to us is that this company, as a multi-brand retailer, as well as all the brands that we create and sustain, if they can have a long-term role in the economy of India to serve the consumer need in a very meaningful way, in a way that it is a much-loved brand from a consumer perspective. So I think that is our long-term interest, that we work towards. We work towards understanding our consumers and giving them what is the right product for them at the right price and in a manner that they can enjoy it very well.
And with that, Falguni, I'd like to thank you for taking the time out of your busy schedule to be here on ET Now. It is Nykaa, which is kicking off the IPO party on Dalal Street.
Thank you, Nayantara.